So I know everyone's so excited to talk about our homeowners insurance. Erica and Jusus were with Goosehead. Just going to kind of give you some basic knowledge of what it takes to get that homeowners wrapped up right at closing, so you can close on time and stay in your home protected.
So some of the basic, there's so many different types of homes and so many different types of policies. So when you're first making your, purchase on your, probably the biggest asset that you're ever going to purchase in your lifetime, you want to make sure that you're 100% covered with the right type of coverages. So different type of policies, depending on the different types of property you're actually going to be investing in. Most of us today are going to be investing in our first-time homes. First-time home buyers are just really popular. Want to do like an HO3 policy. Those are going to HO1, HO2, and HO3 are going to cover your homes. Your basic and your broad only cover so much. It's only going to cover your dwelling. But there's so many other things other than your dwelling that you have to cover. We're talking about liability coverage. Are you going to keep your finances and your home safe? A lot of people are there trying to take the quick buck, make a quick sue, and try to grab your money. So you want to make sure you have that liability protection as well, along with your belongings. You actually have so many belongings. We have furniture, we have clothing, we have so many things that belong to us and we worked hard for. You want to make sure that those belongings are covered. HO1, HO2 policies, they don't really cover the liability or the belongings. So we want to, but your HO3, that's going to be like your main target of what type of home policy you're going to want to have to make sure you're covered your dwelling, your liability, and your belongings. So that's like the target for your home buyer policy. There's also other policies like for renters. If you're ever, you're renting your home, you still need to have that protection of not necessarily the dwelling, but your liability and your belongings. There are also, if you're going to get into a condo, there's specific home policies for condos, older homes, and mobile homes.
Can I ask a question?
Of course.
Could you explain the difference between liability coverage and dwelling coverage? I don't understand what that means.
So your dwelling coverage is basically going to be covering the actual dwelling itself. Your roof, the siding, the actual house. Your belongings your liability is actually going to be covering it's going to be covering yourself against others. So somebody comes and visit your home, they trip and they fall on your porch because you have that high step on your going into your home. They have medical bills. They broke their leg. They're like, hey, I really need help with my medical bills because I fell at your house. Well, that liability is going to protect you and cover those medical payments if somebody gets hurt on your property. So your liability is protecting you. Your dwelling coverage is covering your home.
Okay.
Does that help?
So it's not, even if it's their fault?
Even if it's their fault.
It's still covering me?
It's covering you because it happened on your property. There's actually extensions of the liability. Usual homeowners policies, you can actually have up to $500,000 coverage in liability, but there's a thing called umbrella. If you want a little bit more, you have a little bit more asset, your home's worth a little bit more than $500,000, you've invested in $1 million house. There's umbrella policies where you can actually extend your liability coverage to up to $5 million. So you actually have other policies that you can put on top of your homeowner's policy to extend your liability.
Okay. Awesome. Thank you.
All right, and so basics that we have over here, just like the image says, what causes your rates to be different? We talked a little bit earlier about how important credit is. This is one of the factors. We definitely want to consider, the history of any claims that you've had in your home, your neighborhood, because you don't know if you're like in a really nice neighborhood or you're in a neighborhood that's still growing or a neighborhood that's being renovated. It all just depends on factors. So if there's crime in that neighborhood, could increase your rates. If there's claims, it can increase your rates. Your options that you have coverages, we just talked over some of the basics of the coverages. Your HO3, of course, is going to be more than your HO1, HO2, because those are just basic policies, excluding some of the more important things like liability. So going a little bit further into that, how much coverage do you want? That is going to be where we're going to actually find the rate to be changed the most. Okay, so the more you want to have protected against all perils, you're going to end up paying more, obviously, right? So the other thing that you want to think about is, your credit. There's an insurance score that we kind of go based off of what the kind of coverages you've had in the past. And we can definitely talk about more about that in detail whenever you call me. We'll talk more about that.
When you
call me, or when I call you. Okay, so, but yeah, definitely just things considered, and definitely the condition of the home. If the home's a brand new build, those are gonna be wonderful. But you know, if your home's an older home, there's gonna be more than likely some issues. Not every home is perfect, but we definitely can get it covered.
Not even new homes are perfect, so.
Exactly. So,
So insurance basic of what a homeowner's insurance policy covers. So you have the policy, well, what happens if this and that? So your dwelling coverages are gonna be protected under like the basic perils, of what we call perils, is any event that can cause damage to yourself or your home. So fire, wind and hail, lightning, those are like the main things that are gonna be, factors like, that's what the home's at risk of, getting damaged from. Your other structures, you have your fences, you have your shed in the back, you have your garage. Anything that's detached from the main dwelling of the home, there's a coverage on your policy that's gonna cover those specific buildings on your property. So you wanna make sure that you have your dwelling coverage, it's gonna cover your main building of the home, and then your other structure in the case that you have it. Most policies will have the other structures on there, even if you don't have anything on the fence or like a fence or any other structure on the property. But it comes with the policy, and it's again what Jesus said. You want to prepare for the worst, hope for the best. Personal property coverage. That's also going to be a point of the policy that you're going to want to make sure that you have enough coverage. This is an adjustable amount, so usually it's about 50% of your dwelling coverage. So if you buy a house for $350,000, you're gonna want your dwelling coverage to be at least $350,000, or if not more, because in these day and age, like you buy a house one month and a couple of months down the road, it's worth more because of the rates go up. More people move into town, your house becomes more desirable, and you maybe want to even go up on your coverage. Your personal property, 50% of your dwelling coverage. So if you have that $350,000, you're gonna get $175,000 for your personal property. That can be adjusted. You can go all the way up to almost 75% of the dwelling coverage for your personal property. So that's gonna be depending on you. How much personal property do you have in your home that you're gonna make sure that it's covered? You're also gonna want the endorsement on your policy that you get replacement cost on your personal property. So you have the personal property coverage, but are they gonna give you everything at cost at brand new? No, not if you do not have the replacement cost coverage on top of your personal property coverage. Does that make sense? So to get your brand new TV, at brand new cost, you want to add that endorsement on your policy. Your liability coverage, again, it's going to cover yourself and cover your family. Medical bills, your legal expenses in the case that you do unfortunately get sued, any injury and lost wages that somebody is affected by in the case that they do get harmed at your home, and then cost for dwelling, any damages and accidents caused by somebody else's. So you're going to that question, even if it's somebody else's fault, you can actually get costs back to your home in the case that something happens on your property. Any questions about that?
sorry. Okay. So it's a little knowledge check. You want to continue this one? Okay. So a little bit of what we talked about already. Homeowners versus the dwelling coverages, because we may have home buyers in here, but we also may have people who are in here for investment properties. We cover all types of coverages there. Main differences between the two, of course, is typically a dwelling for people that are investors are going to be people that are just using the home as rental properties, landlord properties. Those are going to be seasonal homes, possibly as well, like maybe a secondary home. For the most part, the main differences between the thing is when you have a homeowner's policy, theft is covered, versus the other one, it's not covered. Because it's like no one's there, so there's not really an investment. For the most part, you wouldn't really have that coverage. So another extra that we can have available are water backups and foundation issues coverages. Those are some of the things that you definitely want to have on your homeowner's policy, because you never know when that pipe's going to burst. And those costs can cost anywhere from $2,000 to $3,000. If you have that in your pocket, great, but this is going to help you, because then you just pay your deductible, typically $500, and then it'll be taken care of at 100%. So things that you also want to think about, we talk about replacement costs. Why is it that replacement cost is less than what you're paying for your home? A lot of people have that question. We're not paying to pay for the land. That's what when you think of market value, you're paying for everything included in that lot, right? Now, when it comes to replacing, we're just replacing the dwelling. The actual part that got damaged, or God forbid, if the house were to go up in flames, we're gonna replace it to the way it looks now. Just the value of what it is here today to rebuild it with the materials like similar materials. We're not replacing everything and the land. So that's the main reason why you may see differences in the replacement cost. You got your loan for $400,000, but the house is replacing it at $300,000. There's a $100,000 difference, but it's because we're replacing your home, not everything. All right, and then these are just typical excuses that you would have. Acts of God, earthquakes. We have flooding. We also have power failure that are just exclusions. Neglect. So if there's something that you're not doing to maintain your home and keep it in a safe standards, then of course that's not going to be covered. Intentional is like the main one that you think about. People that do insurance fraud try to make things happen to where it looks like it was an accident. They'll find out. I don't know what it is the inspectors do, but there's always going to be someone's trying to get around that. Government action is last two, but yes, ma'am.
So why are acts of God and like flooding excluded?
Because we can add them on as endorsements as a separate policy.
Gotcha.
So, I mean, not because the insurance game is trying to make money, but because these are just exclusions from the home. And if you do want that extra protection, we can add it. So that's the
But
main
usually
thing.
the reason why the insurance companies don't already offer that is acts of God is not gonna affect just you, your home. It's gonna affect your neighbors, it's gonna affect the neighborhood. So with insurance agents, it's gonna get a little costly. So to add that insurance is gonna be to add more premium to the policy.
Right.
And how much is that usually?
Depending on how much coverage you actually want for that home. So, sometimes it actually goes up to, between 20-30%, just depending on, again, how much dwelling coverage you have. That's gonna be like your deciding factor. Always take and consider we're in Texas. Earthquake insurance is actually not very common to have here in Texas, but you're in California, you might wanna have that endorsement on your property.
Right.
Flooding, I just wanna mention that flooding that's common in Texas, definitely. So I definitely recommend our homeowners to get a separate flood policy. Some carriers actually will have those endorsements actually put a flood policy onto your endorsement onto your policy, but usually we actually like you to have a separate flood policy specifically for that peril. Usually those, depending on the cost of your dwelling, you're going to $350,000. I lost my thought.
Everyone's waiting.
You're going to be, you want that flood insurance to cover everything. So it's usually between maybe $400-$600, for a flood policy for a 12-month policy.
Yeah.
So I have a question.
Mhm.
If you're getting a flood policy, or do you need a flood policy if you're not in a flood zone?
No, you
Okay.
do not. It's relatively up to you. Also depending on your lender.
That's true.
Sometimes your lender will require it just, because they want. Usually, if you're in a flood zone, it's required.
Well,
You're
yeah.
gonna have to have that policy. And we can definitely do determinations on that. Look up the address, pull up a quick determination to see if that's actually gonna be necessary for the home you're gonna purchase. And you can know that information before you buy.
Yep. Agreed. And then these are just some of the facts that we have for you guys. That a single fire claim can increase your rate by 20%, but that's going to be pretty much the average too. If you think about losing all your first-time home buying discounts, potentially like if there's more claims at neighborhood, the next year you can see rates increase from 10 to 15% on average. So don't be afraid, and when rates go up, that's what we're here for. We'll definitely shop around and see what we can do for you. Claims related to wind and hail damage are among the most common, along with water damage and property claims. Talking a little bit about how we need to add some of the water coverages, which are optional coverages. We'll go over here in just a moment. And then a lot of people don't know this, but 2/3 of the homes in the US are underinsured. So that's why it's great to have an agent. We'll be able to kind of just go over a little bit more information about what you should have versus what you want to pay.
I think that's like the biggest difference when you go with Goosehead Insurance versus like a different agency or go to a carrier, directly. Is Goosehead Insurance is actually going to make sure that you understand all the everything that's gonna be coming with the policy. Also with your service. So in the case that you have a question, you need to make a change, Goosehead has like a specific team that's gonna service those policies for the client, so you don't have to. So we do that, we do everything for you.
That's good. All right.
So you have your optional coverages. We talked a little bit about our umbrella coverages. So if you're a landlord, that's something you definitely want to maybe get an umbrella coverage, because you're just a little bit more liable if you have anybody renting your properties. Trampolines, pools, everything like that, anything like that can actually add risks to your property, you definitely want to make sure that you're covered. So that umbrella policy would be a really good idea in the case that you have an aggressive dog, a pool, a trampoline, anything else that would cause more risk to the property.
So the optional coverages that we're talking about, just real briefly, these are like some of the four that we always like to include as a start. We can always remove things to make the price a little bit more convenient for you, but these are just standard. The foundation, water damage.
Highly recommended to be put on your policy.
Very recommended. So you're going to see what it covers there: settling, cracking, shrinking, bulging of the foundation. And then it's going to be caused by accidental escape of water from plumbing or heating system. Very important to have. Water backup. I always use the example of just like sewer water coming out of your sink, or maybe like somebody going and flushing a toy down the toilet, and that water just backs up and causes damage. Very important to have that. Like I said, anywhere from $2,000 to $5,000 on average. We typically start the endorsement at $5,000. You can always add up to $20,000 worth of coverage if that's what you want. But just something to have.
And then do you have a quick question?
I was just curious, how much can people expect to pay for more umbrella insurance and to get some of the optional coverages to make sure
It's
they're...
actually not that expensive to add your umbrella coverages. So I would say, the cheapest I've seen extra umbrella coverages, another
Maybe like $200.
like another $200 to add on to a 12-month policy. So you break that $200 between the 12 months, it's dollars, to add extra liability coverage to your policy. So it's not expensive to have. A lot of people don't know about umbrella insurance and that how cheap it actually is to add that extra protection to yourself and your family.
For foundation itself, on average, it could be an extra $100 to $200 depending on how the square footage. But yeah, if you think about paying an extra $100, $200 versus a claim that you have to go and dig up your foundation to fix one of the pipes, that's gonna be maybe 5 G's out of your pocket. So would you rather pay the extra $100, $200 to endorse it and then just pay your $500 deductible, or do you have $5,000 to fix everything when it comes out? Because you're gonna put the claim process in either way. And then what's gonna end up happening is if you don't have this endorsement, you're gonna have a $0 paid out claim, which affects your rate, and it's not gonna get fixed until you pay for it. So definitely important to have that. Water backup and water seepage and foundation, they all kind of tie in together. So for the most part, if you have foundation, then you can get these other two. But if you don't want the foundation, then you won't be able to get these because of what it endorses. It takes care of accidental escape of water. And then these will add additional things. So the water backup was what we talked about, sink water coming up. The seepage or leakage is gonna be something like a pipe that busts that you don't even know that's leaking for more than 14 days. And then all of a sudden you're like, why is my water bill so high? Or why is the wood rotting over here or something? Something's happening where you realize that there's been a problem for more than 2 weeks. Then this will come into play. You'll be able to have that covered at 100% or up to the limit that you select. Very important to have for me, because actually, in my experience, this actually has happened at my parents' house. We didn't even know. My dad's a handyman, and he didn't even know. You know what I mean?
The most common peril for your home is going to be your water.
Yep.
So making sure that you have your water coverages all through your backup and your seepage are totally different. And your agent might put one or the other, but you want to have both. You want to have seepage and leakage and backup. They're very different. And the insurance carrier will make sure that they understand what happens so they can try to get out of not paying those fees. So you want to make sure you have both.
Exactly. And the service line is just another optional one. For the most part, a lot of homeowners don't even know what that one is. To me, I like to add it automatically. So if I remove it, at least I let them know that for up to your within your property line itself, you have service things. You have utilities that come in. You have all those things that people need to dig up and get into. The city will only go so far outside of your property line. Well, once it goes into your property, it's your problem. So if you don't have this, you're going to be paying for whatever it is that you're repairing. But if you do have this, typically starts at $10,000 in coverage with like maybe a $500 deductible. Then you're just paying your deductible for them to fix whatever it is that it may be. So I really like that one. But yeah,
That's not very common. That service line coverage is not as common as the water coverages on the property. But I really recommend that for somebody. You have large trees in your front yard. Those, the roots overgrow and they bust the water line. You want to make sure that you have those service lines. So if you purchase a house that actually has trees in the backyard, trees in the front yard, that's definitely coverages that you want to probably put on your policy.
Man, I wish I talked to you guys 5 years ago.
Did you have an experience with that?
Little
bit.
Dang. But yeah.
So most common insurance discounts. So how do I save money on this policy that's costing me $1,500 a year? So multi-policy discount, you want to make sure that you're bundling. I'm sure you've seen the commercials like recently. All the insurance carriers are going to the bundle. You want to make sure that you're, not only insuring your home, you also want to put your auto. You probably want to put it with the same carrier. You're probably going to get some discounts when you bundle bills. We'll bundle everything. So you can do homeowners, your flood, your auto, personal property. If you want to schedule a diamond ring, that's something you can also put on these policies to get multi-policy discounts. Automatic payments. So if you're taking those payments, they don't have to worry about calling you about your payment. You're automatically be taken out of your accounts. That's also, you get a discount for that. Paperless. Everything's online nowadays, so they like that. It's easier. So they also encourage that, and they give you paperless discounts. Advanced payment discounts. So if you pay in full, usually when you send your premiums to your closing, you're going to get that discount because your mortgage is going to pay that in full for you, and then you pay your mortgage back, for the insurance. Your claims-free discount. So you have a really good record. You don't have any claims. You're also going to get some discounts for claims-free, and protected devices. So alarms, burglar alarms, water sensors. Smoke detectors, fire extinguishers, anything that can actually add safety to your home is going to give you a discount.
All right. And so just kind of reiterating what we have, other ways to save money. Everyone wants to know, how much am I going to pay in the event of a claim? That's our deductible. Very, very manageable as far as whether you want to have something super cheap out of pocket, you're going to see a higher premium. Or maybe you want to put it at $5,000 or higher. Well, depending on the home, if it's 1%, that's typically going to be the lowest that you can go. But some places will offer $1,000 deductible, just especially for new builds. But anyway, so the higher the deductible, the lower you're going to pay. But then again, think about it in the term of claim. How much are you going to pay when it comes down to using it? Okay. Think about combining your insurance into a blanket policy where everything's covered underneath one policy. You kind of just list everything else that you would want to have covered under that. That's going to be a blank policy. We can go a little bit further into that as well. But discounts, there's going to be veterans discounts for certain carriers. There's going to be discounts for you being affiliates of certain groups. So just ask. That's all you can do is ask, and we can check.
If you ever get engaged too, they're going to ask you how they can save you money. So that's another reason why to switch over to Goosehead Insurance.
Exactly. So don't buy coverage you don't need. We did talk about those optional coverages. Great, but like Erica was saying, are we going to buy an earthquake insurance here? Probably not, but you can. So insurance up to date, that's one of the most important factors that I can think of. People that have lapsed in coverages, those rates are not going to be nice. We can find you somewhere to put you, no lie. But you're
going to pay more.
Way more. So even a lapse of just 30 days, or just 30 days, you don't qualify for a lot of the carriers that we would want to put you with once you go past those 30 days. So just think about that. You're doing yourself a disservice. Just keep up with it. Even if you can't afford what it's at, we can dumb it down and fix it later. That's always something to think about. So next thing we'll talk about is the risk. So how are you going to manage those risks? Get yourself some of these protective devices if you can. Make sure that you if you have deadbolts on the house, some houses don't, I don't know why, but it is what it is. Good credit score, we talked a little bit about credit, maintaining that, making sure you make your payments on time, and that also entails paying your insurance on time to, one, keep it going, and two, showing them that you're still willing to be invested in this home, your asset, and the protection you have for it. And the last thing we have for you is going to be shopping around. That's what we're here for. We're here to shop our 30+ A-rated carriers for you, find you the best rates for the coverage that you want. All right. Any questions?
Well,
Yes.
how often can you make changes to your insurance plan?
So it depends on the actual change itself. So if you're adding solar panels, some places wouldn't allow you to add it in the middle of the term. So in that case, we would need to shop around for you. Or if it's close to renewal, we can add it at renewal. But as far as like changing something like specific removing coverages, you can remove at any time. And we just submit a service request or call the carrier directly and update that. And the premium will adjust accordingly as well. So a lot of times, since a lot of y'all might go through a mortgage bill, so it's already gonna be paid in full for the year. If there's any credit, what ends up happening is at renewal, that credit might just adjust the rate for the future, or two, you might get a check, get sent back after X amount of time.
Okay.
But specifically to your question, like changing coverages, it's anytime.
You can change it anytime with some exceptions, but most of the time you can change your policy anytime you need to make a change.
Mm-hmm. Yes.
So, using rental properties, sorry?
Sure.
You know, like, so for people who are going to their homes, I know that's kind of a slightly different coverage. And allowing people with pets to come into their home.
Mm-hmm.
If their tenant has a policy that covers their dog, especially those aggressive breeds, is that something that their insurance company would back up? Am I asking the
So
question?
for like a landlord policy and then adding pets on the policy,
Mhm.
I will be honest, most carriers are not going to accept aggressive breeds. It's gonna be a little harder to find a carrier that it does accept those, that aggressive breed in the home, especially with the landlord policy. Usually, as a landlord, you probably,
The animal exclusion is like automatic.
yeah.
It's gonna fall into the renters.
Yes.
But the renter's insurance also would exclude any aggressive breeds. So it's literally just to protect you in the event of maybe it happens, but if like your dog bites somebody, it's typically you.
Yeah, the
Gonna be taken
renter.
care of. The renter
That'll be
itself.
on the renter.
It wouldn't fall onto the landlord. If that's
Okay.
the question was.
So it doesn't fall on the landlord. So I guess, are you familiar if tenants can purchase type of pet policy
Yeah,
that would cover that?
Absolutely. Yeah. Along with your renter's policy, we're going back into like the bundling. You want to have your renter's policy. You have a pet insurance policy.
Mm-hmm.
You have, anything else that you need to put on top of your renter's policy. So that's a really good example of bundling with a renter's situation.
Even for aggressive breed dogs?
It'll be a little bit harder to find, but there are carriers out there that'll help.
That'll take it. Yeah. You just gotta be willing to ditch out a little bit extra cash.
Yeah. Those aggressive breeds are pretty expensive to insure, but it's possible.